Hello, welcome. This is Yuge, and today I'm going to talk about how hacking 2 to 4 units using a trifecta effect strategy. This means you have the ability after you purchase the property to make money 3 different ways while you are living in one of the unit. You're making money. You can assign one of your units, one of your remaining 3 units, if it's a fourplex, as a short-term rental, and the other second unit will be a mid-term rental, and another unit will be a long-term rental situation, and you are living in one of the unit. This is a exponentially wealth building tool that will change the trajectory of your financial future using this amazing house hacking scenario. Stay tuned and come along for the ride. House hacking in today's investment strategy. Without further ado, let's go. Using this strategy, 2 to 4 units is what I call a trifecta effect. It's a Swiss Army knife. You could create this house hack situation in a multiple beneficial profit-making entities. Short-term rental, mid-term rental, and long-term rental. By the way, short-term rental is less than 30 days renting. Mid-term rental is more than 30 days, but less than a year rental situation, which is really, for those of you who do not know, is a new real estate asset class, the mid-term rental asset class. Anyway, and of course, the traditional long-term rental annual lease for tenants. And although you can do this in any 50 states, ideal locations, if you happen to be in some of these locations, whether active duty or in ex-military, ideally, perhaps in California, believe it or not, in Texas, Florida, North Carolina, and South Carolina, just to give you a sample. By the way, this presentation also applied to the FHA primary home buyers, not just military veterans. Military veterans, of course, use the VA loan, 0% down, and FHA borrowers or individuals that are buying a primary home using the 3.5% down payment FHA loan to obtain a 2 to 4 units, and you live in one of the unit. Let's keep going. 2 to 4 units using FHA loan, 3.5% down, and 2 to 4 units using 0% VA loan. And of course, by the way, some of this slideshow, I'm not going to dwell on the details of it. Once you review my video, you can pause a particular slideshow and digest some of this outline, which I have shared with you. Most important thing is do not commit loan fraud. You got to do it legitimately. Of course, work with your team and everything else. By the way, I do one-on-one consulting, coaching. And so anyone out there, I'm available to provide this service. Of course, I have done various house hacking over many years. I have purchased several properties using VA loans over the years, but above all, I have multiple rental properties over many years all over the US. Plus, I own the real estate investment club here in San Francisco Bay Area for more than 2 decades. By the way, so you can become a serial house hacker. And so this is it's just an amazing situation. You can buy a duplex, triplex, or fourplex and live in one of the units and get the favorable primary home mortgage rates associated with FHA and or VA loans. Some of you who are military veterans or active duty, you can do VA loans and FHA loans as well. So you can piggyback these 2 powerful loans over the course of time. And let's see how much wealth you can create as a result of doing this piggybacking. If you qualify, that is, you can have multiple FHA and VA loans over time, but you can only have one FHA or one VA loans at any given time. And at the VA house, you can do a house hacker with a VA loan, whether you are in active duty or ex-veteran like myself. I've done 20 years in the US Army. I retired 20 years ago. Active duty, amazing. Anyway, let me share with you over here a little bit. So I'm going to use a case example. I'm going to use an example of a fourplex as a real case example, $849,000 for a fourplex located in Texas. And I will go over it for pro forma a little bit. So basically, this $849,000. You have to do the numbers. I'll go with the numbers from a high level. This forecast, whether you can get a zero down VA loan or 3.5% down payment, FHA, as a primary home buyer, that is. I calculated this case. This is a real case example, by the way. The principal and interest monthly is almost $5,000. The monthly tax is $1,274. Insurance is $300. So your PITI, which is principal insurance tax, principal interest taxes insurance, PITI PD, is $6,500. So you have to go through loan underwriting, loan qualification. That's why it's important to work as a team. $6,500 PITI multiplied by a multiple of 2, which give you 50% DTI, which is debt to income ratio. I know you don't understand some of this explanation at this moment. It's okay. You can learn more about it above and beyond watching this video, but I may use some acronyms which seem foreign to some of you not. So it all depends. Regardless of where you live in any of the 50 states, including Alaska and Hawaii, you can apply the house hacking strategy in your area if you choose, if you so choose to desire. Anyway, so $6,500 PITI monthly multiplied by 2, you need ordinarily to buy this $849,000 property. You need a $13,000 of monthly income. Yes, $13,000 monthly W2 income ordinarily 12 months. So essentially you need around $156,000 of annual salary to buy an $849,000, well, not a $1 million, there's a typo. If you were to buy a single family home to live without a house hacking scenario, you would need $156,000. However, if you can buy this forecast instead and live in one unit using a house hacking scenario, the numbers are the same. $6,500 PITI minus, I'm making the assumption of the 3 units. Each unit in this fourplex, long-term rental, $1,500 per unit. And then 3 unit multiplied by $1,500 per unit equals $4,500. You collect the rent on the remaining 3 unit while you live in one of the unit, $4,500. Now 3 unit is $4,500 multiplied by 75%, it's $4,500. Look at this calculation. $4,500 multiplied by 0.75 equals $3,375 of the rent that the lend underwriter will allow you to have. $3,375 add on to the debt ratio. If your monthly debt is $4,500, you add on $3,375. You need around $50,000 to $55,000 annual salary to house hack this fourplex of $859K. You need about $60,000 annual salary to qualify to house hack this particular property. This is a real life example. Before I go over the details of the pro forma, if you will, the cash flow analysis on this fourplex case, with respect to VA loans, there are no loan limitations, no loan limit limitations. FHA, there's a maximum loan of around $907, $900,000, nearly $900,000, up to 4 units. But then again, if you live in a high cost area, such as California, where I live, you can FHA loan limit, the maximum is up to $2 million. So you have more midway with that. But by the way, something that a lot of people have not talked to you about, even though your house hacking is a primary home and rent out the other units, you may claim the tax write-offs associated with your multi-units, just like any other rental property, cost segregation, depreciation, what have you. But consult a tax advisor. So by the time you live with the one unit for a minimum of 1 year, after 1 year, if you decide to move to another location, wherever they are, then you could rent out the other unit that you had a vacant because you live there. So you can add on substantial more rent to achieve cash flow for the long term. And each time you house hack from one house to another, you're not going to sell it. You're going to keep this unit as a rental, hopefully for a long time to come. Does that make sense? So I'm over this actual deal. I just want to make it fun and exciting for you guys, because if you have a real property that fall under your lap, in wherever you live in 50 states, you could win yourself a real estate lottery, if you will. So this is an actual deal, which I found in San Antonio, Texas. It could be in Hawaii or South Carolina, North Carolina. This kind of deals are available. It's not that easy, but Of course, you have to do the work, but that is a real property. This property could be gone by now. It was on the multiple listing service a couple of weeks ago, but still, this type of properties are available. You have to make the time and effort to find these deals so you can house hack. This property, V49K, located in San Antonio, by the way, it has 2 bedroom per unit, so total of 8 bedroom. This is normally is a traditional rental. You rent for $1,500 per unit. So if this unit is rent for all 4 units, so you have a total of like around $6,000 of monthly gross rent on a purchase of 849. That's if it is a pure investment property, but you're using a house hacking situation, so you're using 1 unit vacant. By the way, if you're not using a house hack, you can buy a 2 to 4 unit. You can buy as a traditional rental property. Normally, you have to put at least 25% down payment. So that could be a lot of money, right? 25% multiplied by 849. We're talking almost $200,000 down payment, including closing costs. But you're working smart. You're watching this video, learning, educating, and you're able to get it with a very low 0% down. Is that amazing? And FHA only 3.5% down. So we're talking less than 30 grand total out of pocket for an FHA type of situation. But again, the theme of this property is a trifecta effect. This property happens to be in this location whereby you can do not only long-term rental as a traditional scenario, but you can do a mid-term rental and a short-term rental on the other units, on the other bedrooms. And before we do that, look at the desirability of this property. It's just very well designed, good amenities. It just give you a multiple streams of income in different type of categories of renting, which is extremely powerful. So this amazing opportunity, the real life situation, again, is a good location, is in close to downtown San Antonio, river walks, and all those things. By the way, I was stationed in Fort Sam Houston, Texas, in San Antonio when I was in active duty army long time ago, more than 30 years ago. So I'm very much aware of San Antonio. In this case, 5 of the units happen to be like a mid-term rental. This house is being rented out to traveling nurses. In case you don't know, traveling nurses they travel from hospital to hospital. They rent a unit. They rent a house anywhere from 2 to 6 months. But there's only a primary type of renter you should use for mid-term rental. But there are other people that are renting on a mid-term rental situation. So this asset class is up and coming. I have other videos that I produce. You could watch my other YouTube channel for it. You learn more about mid-term rental. But anyway, you're getting this mid-term rental at $1,300 per month. So 5 of the unit are rented to traveling nurses at $1,300 per month per unit. And then 2 of the units, 2 of the rooms are rented in a short-term rental situation using Airbnb. So the combined monthly income is $10,000, even when you are living in one of the units, and the combined gross rent is already 10 grand, which is amazing. Let's go over this pro forma again. Even with 1 unit vacant, you're collecting 10 grand, as I told you. You're getting an FHA loan with 3.5% down payment at less than 6% mortgage rate, interest loan, or VA loan 0% down. So your mortgage payment is $49.38. You have a gross rent of 10 grand from your other 6 rooms, 6 units on the other 3 units. You have 4. These are 4-plex, right? Each unit or the 4-plex is 2 bedroom, 2 bath. So make the long story short, you have 3 units with the mid-term rental renting to travel nurses and the short-term rental renting for people who's doing Airbnb less than 30 days. Total gross rent monthly 10 grand. So all you got to calculate your monthly debt service, your mortgage is $49.38, and your taxes, insurance, what have you. You can self-manage this. So you're not going to, although you can have a property manager manage it for you at 10% fee on gross rent. But I'm using this scenario. You are managing it yourself. So you have choices, right? Anyway, at the end of the day, you're still having a cash flow of almost $2,500. Monthly cash flow minus your mortgage, minus your debt service, monthly expenses of taxes, insurance, and maintenance factor and upkeep and vacancy factor, which are already incorporated into this those format. One unit occupied, which you live there at least a year. If you happen to move after one unit, you can rent this current vacant unit and collect maybe $2,000 monthly rent on this one unit that could be occupied after you leave. Guess what? Your monthly gross rent could be at least 12,000, 13,000. Am I right? Then look at your cash flow. Look at your cash flow. If you rent out your remaining unit after you move out, you can do another house hack. Monthly net cash flow will be more than 3,000, even 3,500 when all 4 units are rented. You put no money down on a VA loan if this case applies to you, or less than 30 grand, including closing costs and what have you, on an FHA 3.5% down payment. This is absolutely mind-boggling. I'm going to spend a few more minutes doing this because I want you to read several remaining slides. Once you buy your house, and even during the first year you live there, you are already achieving a powerful wealth building vehicle. After you lease the unit, at least a year beyond, you rent out all the units and you can house hack the other units, whatever. At the end of the day, a rental property, you own 2, 3 or 4 unit max under the FHA and VA loan lending guideline as a primary home buyer, that you're creating some powerful wealth building strategies, because a rental property is history's most attractive, most powerful, and most proven multi-dimensional real estate asset class, because you're getting paid in 4 different ways: cash flow, passive income, increasing cash flow, increasing rents per year, right? Inflation increases, your rent will increase. So this initial cash flow I shared with you is just the beginning, just the first year. You're getting tax benefit. I could spend another video talking about this. Powerful tax benefits, passive losses, depreciation, the whole 9 yards. Equity appreciation, 3 to 5% growth or more per year, equity growth, and you leverage the power of 100% loan on a VA loan and the power of 96.5% FHA loan. Right, the power of leverage using other people's money. Talk about multi-dimensional asset class. Over time, this fourplex or duplex, triplex, you're using house hacking, you could do live negotiation, if you will. You can do so many things, as I mentioned over here. You can turn into a single family home, principal home, vacation home. You can cash out, refinance equity to buy more rental properties, just because you took the first step of house hacking. The first step, and almost free, pays your rent. So the recap is, I want to hear where you located, where you live at, what is your goal? Comment below, comment on below. And also, if you see value from this presentation, please smash the like button and subscribe to the YouTube channel to hear more about it. And better yet, on my website, please, you can submit your email. When you submit your email on my website below, you'll be able to subscribe to my weekly turnkey Wednesday investor newsletter. Once you join our free network, you receive weekly market updates, investment opportunities, real estate education, and interviews with top industry leaders straight to your inbox that you won't find anywhere else. Helping investors invest out of state is our specialty, and we connect with experienced real estate agents and experts in the hottest markets in the country. And regardless of where you live, we've been doing it for more than 2 decades. I'm also a mentor, coach, consultant. If you need help with your house hacking strategies, no matter where you live in the US, I can help you. Again, the recap is just this one strategy with the house hack will change the dynamics of your financial future. If you are willing to do it, if you're committed, if you're dedicated, if you take action, and then again, you can achieve exponential wealth building, generational wealth as well. All right, thank you so much. I will see you on the next video, not only about house hacking, but real estate investing news and regular housing market investment news as well. Have a nice day. Bye-bye.